Hello, good evening everyone. Welcome to this week's Traders Club. This is another ChartNexus video. My name is Jared. Okay, so today is the 19th of May, Tuesday. So let's look at STI, right? Singapore stocks. Okay, so STI, previously we were talking about three support levels, right? So one of them, in fact, last week was broken. Okay, but the other two managed to hold on. Yeah, so just to do a quick recap, which were the three support levels, right? One, of course, was the 20 MA. Yeah, so as you can see over here, the 20 MA, the price was not able to go beneath until last week, yeah, where it finally breached the 20 MA support. Okay, but as we know, there were other support levels, right? So the horizontal support, right? Previously the resistance broken turn support, and also the gap support, right? The one that draw this rectangle here. So there was a gap up here over the early April. Okay, so you can see when it came down to end April, it tested the gap support, bounce up. So, and when it was down last week, it was able to bounce up again from Monday and Tuesday. Yeah. So the thing about the support is, yeah, is holding, but I think more significant is that the resistance. Okay, so you see the 50 MA, right? Previously was resisting since I think last week, not able to go past. Okay, so things have begun to look differently. Can you see for the first time since February? Yeah, for the first time since February, the price is able to trade past the 50 days moving average. All right, so that goes to show that the bulls are still able to hold the support levels and able to trade past at least the 50 MA resistance. Of course, the key horizontal resistance for the for STI will still be the 2670 mark. Yeah, this horizontal resistance, right? And of course, the small gaps that we need to take care of as potential resistance. Right, there's one over here, and there's a bigger one up here around the 900. Right, so those are levels that we will be paying attention as if the bulls are able to continue the rebound. Okay, but all else, currently good news. STI support is holding, right? The horizontal and the gap support is holding, and now it's trading past the 50-day moving average. Yeah, let's see how this week it managed to hold on. Okay, so that is STI. Yeah, before we screen for stocks, right, the stocks that trigger the trading signal. Some of you will be looking at this screen and find this a bit foreign. Okay, this is basically the ESPMaster. This is our web page, yeah, web-based charting solution. So for those who have the subscription for the ESPMaster, right, you can just go to the website, right? It's stated over here, ESPMaster.ChartNexus.com. Yeah, you can just put in your same login and password. You'll be able to get this. Later I'll share a little bit more on what you get to see on this. Yeah, if not, you can just use the normal ChartNexus charting tool, and you can still be able to see the charts. Yeah, but for those who have the ESPMaster log screener, you have the existing or active subscription, you can use this web-based solution, or you can even see this on your mobile devices. Right, I'll come to this again in a while. Okay, so before we look at the screening results, let's take a look at SGX, because I believe several of you are in the trade or were looking at the trade at that time. Okay, so let me just turn on the indicator. Okay, so yeah, so SGX is able to bounce off the support, right? 939, which was a previous, 929, right? Which was the previous resistance broken. Right, and then it tested as a support here, tested as a support here. So, and then there are some dividends. Some of you have gotten it if you have still be holding on to it. Now, other than that, the trade that you have not gone in, the day that you have gone in is based on this signal. All right. Okay, so this is the 20 over 50 days moving average. The price pulled back to the support and bounced off from the support level with a MACD 481 green. Okay, so not only it has a horizontal support, it has the 20 and 50 days moving average support. Okay, and subsequently, of course, confirmed, and now the price is just languishing around it. So if you have not taken the trade, it is still a trade you can take, right? Because it has basically fulfilled all the entry criteria. All right, so that is SGX. Okay, the other stock that previously when we're talking about it, if you look at our previous video, we've been talking about SGX and this stock, which is they behave very similarly, right? Especially at that time when the COVID situation just hit and then a lot of stocks were falling. Only these two stocks, SGX and Sheng Siong, were able to clear all the key resistances and able to rally much further. Yeah, but for SGX, yeah, we waited for the price pullback. Okay, so the only thing is that for Sheng Siong, you notice the price didn't pull back. Yeah, so the price basically has gone higher and higher without the pullback. Now, for those who are like fear of missing out and you want to chase this stock, I just want to give you a word of caution. Of course, obviously, it hasn't pulled back to any of the support level. Okay, so if anyone asks what I mean by support, so it's between the 20 days moving average and the 50 days moving average. Yeah, so the price is not even anywhere near. Okay, that's one. But another thing is that it is exhibiting bearish divergences. All right, so what is bearish divergences? So to recap, for those who forgot about it, I maybe mention it in our classes. Okay, so you look at this as the high, you see the price rebound. So the price went up high here. Before it, there was another high. Yeah, so basically, divergences, you're looking for the high. The price rallied, pull back. Rally, and then pull back. So there were two high, and the high, as you can see, it has gone higher. So it sounds pretty bullish because the high has gone higher, isn't it? Okay, but when we look at divergences, then you look down, you see this is where the corresponding MACD histogram is. See the red and green bar, you see that there's a hill. Yeah, so this is the corresponding high. But when you look at the next high, see the hill has basically become like a mole. Right, so the high has gone, the price high has gone higher, but the MACD histogram high has gone lower. So this is what we meant by a divergence in the MACD indicator. Yeah, so the price gone higher, but the indicator gone lower. So what's the significance? It basically suggests that the recent rally, the momentum is weakening. Yeah, so if it goes up, come down, goes up, come down, and you try to go higher. So it's like it's weakening. So if it's weakening, then if you try to take the trade, then your risk will be higher. Okay, so don't chase it. But of course, you shouldn't be because it's not at the support. Okay, but for those who trade a different strategy, be mindful as well because it's exhibiting this bearish divergence. Yeah, for Sheng Siong. Okay, so just to take note on that. But for those who say, all right, you wait for pullback, then yeah, you got to wait for this region. All right. So there's many other stocks which I'll mention later as well. You can wait for it to pull back to all this support region between the 20 and 50 MA. Okay, so not only you make you buy at the cheaper price, you're buying near to support, so which means your cut loss would not be as high as you buy right at the top. Okay, so that's Sheng Siong to take note as a case study. But more importantly, I think you can learn is the divergence. Okay, but be mindful. Of course, the next question some will be saying, since there's a divergence, then why can we short or not? Yeah, so a divergence is not a signal to confirm a change in direction, just showing a weakness in the uptrend. But if we wish to short here, just be very mindful that remember where we say the support is between the 20 and 50 MA. So which means if you start shorting now, you are also going to experience, even if the price were to come down, yeah, you're going to come right into the support zone immediately and buyers may start returning. So these are the type of trades that I tend to avoid, yeah, because it's neither a good long trade, yeah, because of the divergences, and neither is it a good short trade because I'm too near a support level. Yeah, so support means it's going to it may rebound. So if I short here, the price may rebound anytime. Yeah, so these are the consideration that makes me say look away, look at it again. Yeah, and more likely my buyers will be too long because the trend is up. Yeah, the 20 is above 50 MA. Okay, so that is something just to highlight. Okay, now so let's look at the screener. So previously, in the ChartNexus software, we need to go to the ESPMaster screener. So for this online web version, basically the screener will screen out for you automatically. Yeah, so you screen out the different based on the different strategy. Like you can see CNX uptrend. Yeah, so basically I'm screening for the uptrends and downtrend. Okay, so for today, I think for the first time in a very long while, the screening results return, I would say all the stocks that return today are on uptrend rule. You can see CNX up, you can see uptrend rule. Yeah, so you don't see a downtrend. You don't see the downtrend rule or CNX down rule. Yeah, of course, oops, zooming. Yes, but you can see, of course, there are two here, CNX down, but these are the DLC. Yeah, so these are daily leverage certificate. These are not something that we are looking at. Yeah, so for the first time in a very long while, all the stocks are triggered, right, with the buying strategy. So what does this tell you about the market? Right, number one, most of the stocks are uptrending now, and they have met the buying criteria. Okay, now, I'm not saying there's no downtrending stocks. Just that the downtrending stocks are probably maybe not near to resistances, or there's not exhibiting a bearish signal. That's why the screener didn't screen out. Right, so yeah, that's the beauty of having a screener. Okay, so the ESPMaster returns all these results. Yeah, so you can see over here you have several of them. So again, I will go through those that give me a better risk to reward ratio. Yeah, so those with very big risk or very small profit target levels, probably you could ignore. So that's how you can shortlist your stocks. All right. So okay, let's head up to Accordia Golf. So if I click on it, yeah, so you can see Accordia Golf here. Okay, so probably let me remove the indicators. Yeah, so we can see better, yeah, since the screener is doing the work for us. Okay, so I'll turn on. Okay, let's look at Accordia Golf. Oops. Okay, let me find glass. All right, so as you can see, it has triggered the rule, uptrend rule. Yeah, so uptrend rule basically means this stock is already on the uptrend and the price is on the support, and MACD is showing me buying signal. Okay, so look at the entry price, 60.5 cents. So if the price can reach 60.5 cents, that is a buying signal. Okay, the cut loss 57 cents. So your risk is only about, as you can see, 5%, less than 6%, right? Less than 6% risk. Sorry about that. Okay, because the initial profit target based on the initial resistances, at least 6%. So you have definitely for the first profit level, you're already at least more than 1 already. Yeah, then of course the subsequent may go up to even almost 12%. All right, so this is Accordia Golf. Okay, back to its uptrending way. Previous times the trend was pretty choppy. Okay, so it has fallen quite a bit, but now it seems like it's begun to recover. Right, previously, of course, we couldn't say so because the trend was down. Now that the market has shown us that they are able to attract the buying interest. So let's wait for the entry price at 60.5 cents, right, before the, of course, the cut loss. Always look at the cut loss. Be prepared to lose that amount, and if it's able to come up here, that's where you can be looking at your profit target. If you want to use the trailing stop, then you could probably use the MA as a trailing stop as well. All right, so that is one, Accordia Golf. Okay, the next one I would like to look at would be Genting. Okay, so Genting has also triggered the uptrend rule. All right. Okay, so for Genting, right, it has triggered the uptrend rule. Okay, the only thing about Genting is that, of course, your risk and reward not attractive. Okay, but what I want to highlight is that if, right, because of this zone here, right, because it was basically trading in the zone. So what I like about this is because it has been hanging in here for more than a month, and if it hits the entry price of 79.5 cents, it basically would have broken out of this zone as well. Okay, so of course you may say, yeah, the initial profit target is small, but usually on the breakout, there's a good potential that it may break further. Yeah, because of all these pent up sellers here. Can you imagine those who shorted here or selling here between 78 cents and 71 cents? Yeah, so if the price were able to break out of it finally, those who have shorted would be losing. Yeah, they will have some paper loss, they will be worried, and some may start to cover their shorts. When they start covering their short, they may start buying, and when they start buying, this is where we may see the price able to run further. Not only from buying, not only from genuine buyers, but also because from those who have shorted, and that's where they are covering their short position. Yeah, so yeah, the risk and reward, if you just use the uptrend rule, is not good because the cut loss is 6%, profit is only 3 to 5%. Okay, but like I said again, it had been trading inside this zone for a while already. If you can break, then that will be a good trade to look at. Yeah, but on top of that, I believe many are already injunting previously as well. Yeah, so why I say that, if I turn on the indicators, right, you'll be able to see that previously, right, some of you would have been injunting already because of the trading signal. Yeah, you see the support levels and the trading signal, and you could be in. Let's say the price came down, it didn't hit the stop loss, right? So it's still on the way up. Okay, so for those who are in, you're still in. For those who are not in yet, you probably could wait for this breakout of this horizontal level, which was also the zone as well. All right. Okay, so that is junting. Okay, let's look at the next one. XPertTrader. Okay, this is XPertTrader triggered the uptrend rule as well. Okay, so what about XPertTrader? Let me see. XPertTrader. Okay, the risk and reward is not good, but I think it's, yeah, it's not good. So I'm not sure why I put this down. Okay, XPertTrader is not attractive, yeah, because of the immediate high here. Yeah, let's look at the next one. MapleTree. Yeah, I think I wrote down the wrong one. MapleTree Logistics. Okay, let's look at MapleTree Logistics. Okay, so trigger the uptrend rule. Okay, so you can see the entry price 187, right? Cut loss 174. Yeah, so basically if it reaches 187, that will be the confirmation, and then the immediate profit target of at least 7.5% to more than 10%. Okay, so the cut loss is less than 7%. Okay, now also bear in mind, we are near to the historical high again. Yeah, so if you can go back up to 10%, that's where it has a good potential of going further, because that is the historical high. Okay, so we're back to its previous trending wave. Okay, so that is MapleTree Logistics. Let's look at Prime US REIT, triggering the uptrend rule as well. Okay, so same thing, 20 MA support. Yeah, so if you're wondering why it triggered, yeah, so this is where you can see, right, 20 and 50 MA. 20 now is above 50 MA. Yeah, so but more importantly, the indicators are showing the signals to long. Okay, but we still need to wait for the confirmation price. It's 72.5 cents. So you need to take the trade. We hit 72.5 cents. Cut loss less than 10%, 9.66. Right now, the immediate profit target. So that's the one that is determined by this tail. Yeah. So basically, is if it reaches there, is also 9.66. So you have at least a 1:1. Okay. But what I like is the subsequent profit target levels. So which can go up to 20% almost or further, right? So have a huge upside potential. Okay, but of course you got to keep this stop loss, so that you keep your downside very limited, but bigger and much greater upside potential. Okay, all right. So let me go back one more. Venture. Right, look at Venture. So Venture, yeah, we have been talking about it as well because it is the technology stock and it's one of the few that pull back, right? So for those who are in, you should still be in the trade. If you're not, then probably you can enter at the next one, which is $15.77. So we can reach $15.77. So that will be your confirmation. Yeah, cut loss 2.7%. Okay, so your initial profit is about 1:1. Okay, subsequently you could get about at least 3, right? 3:1. Okay, so that's something that you can look at for Venture, especially when this is the sector that is that has been leading the market for a while already, right? So you can take a look at technology stocks, and Venture is one presenting itself. Now, of course, I got a lot of questions on how to trade the other technology stock like UMS, High P. Yeah, so I think the rule of thumb is avoid chasing. Yeah, so what you can do, for example, let me go to say UMS. Okay, so say UMS, right? So you can see UMS. I can tell you on this day, there will be so many people who will be chasing this stock, right? Because high volume, high rally. Yeah, but like we always say, if you are always buying at a high, okay, how do you know you're at a high? You're far from the indicators. Yeah, so if I turn on the 20 and 50 MA, if you look at this, the price is up here. The price is up here. Your support is down here. Your MA support is down here. So basically, can you see? If you buy there, and then your support is 20% away. Wow, so you're basically risking 20% and more. All right, so do not chase. Yeah, so for those who don't chase, basically this is where, you know, yeah, right, you can see the price pullback. Imagine you start buying, and for the next 4 days, right, the price continues to drop. Okay, and you may worry that it comes to the support level. Okay, so all right, so what you need to do is with stocks like that, we need to buy at the support. Yeah, we need to look for the support. So I repeat again, this is very similar to SGX, right? Which we mentioned about. That was one of the last few examples, right? During the COVID situation, right? Can you see over here, right? So this is a support level. Okay, so one interesting thing is there is this resistance level, right, around 83 cents. Yeah, so it could coincide. So if the price come down further, say we see that the price pulls back lower, right? So this area, it may coincide not only with the 20 and 50 MA support, you are also looking at the horizontal resistance broken turn support. Yeah, very similar to what happened in SGX near the $9.29 previously. Okay, so this is what we call a confluence of support. So confluence of support means more than one support level. So which means those who trade or those who look at support using 20 and 50 MA, they'll be looking at this stock. Right? Those who use the resistance broken turn support, they will be also looking at this stock. So you have multiple or more pairs of eyes watching this stock, waiting for look at the rebound. Okay, so this is what you need to wait for patiently. All right. Okay, so this is EMS. I mean, you can look at it and the same for high P. Yeah, so you can see high P rallied, but can you see the price is now pulling back? So that's the good news. Okay, so if it pulls back again, this is where your support level, the support zone, that's what I call it, between the 20 and 50 MA. That's where your support zone in. That means I want the price to come in here, right, and then look for any buying. Yeah, so if there's buying support, the price rebound, you will see some signal change here from red to green. That's why we say MACD change color, right? The momentum has changed. Okay, and of course, this zone is interesting as a confluence level because you can see this point here around 99 cents, right? This was the resistance, horizontal resistance. So it break past that resistance on this day, the price will come back again back to this 99 cents, right? It will be a horizontal resistance broken turn support. Yeah, resistance broken, comes back, it may test 99 cents as a support again. So again, you got the confluence of support. So I'll rather look to buy here, yeah, than just to buy because the price has been rallying. Okay, so wait for the price to pull back and look for the confluence of support. So when is the time to buy? Use the indicator signal as your entry, to time your entry. Okay, so the price may languish around here for days or for weeks. So long as it's still in there, watch. But if the indicator do not show any buying signal, that means the momentum has not changed, the price could break the support. Yeah, so don't just buy because it's at the support now. Okay. If I may, I just share with you one more AEM. So these are the popular stocks, right? The leaders, I would say. Yeah, leaders during this COVID situation. Okay, so yeah, so this is one of those stocks that I've run. This is where, you know, if you wait for pullback, you'll be very frustrating. You may miss. Yeah, so of course these are stocks that you may say, oh, I missed this trade. Yeah, so the next time I see any rally, I chase, and then that's the one that you chase. It starts to pull back. Yeah, so yes, you remember such trade, but they are always far and few between. Yeah, most of the time they pull back. All right. So if you have not taken this trade, yeah. So again, this is where the support zone is. So you gotta wait for that. So these are the trades that I may miss, yeah, unless we book the breakout trade. Yeah, so unless you have taken the breakout trade, which is around the 227 mark, yeah, 227, take the breakout on high volume. Again, this is the day, right? Breakout on high volume. See, the volume is high, and you break past the 228 and go for the historical high. Yeah, so you have taken the breakout trade inherently the risk is higher. Yeah, but if you have taken it, yeah, then yes, you take the risk. Yeah, but if you did not take breakout trade, wait for the breakout to happen and the subsequent pullback to support level. Okay, case in point, SGX. Yeah, so if I just show you SGX again, yeah, so this could have been the $9.29 breakout trade, right? So it was a breakout. See that? You don't chase it. Yeah, so what do? You wait for, so this could be like AEM, there's a breakout. So if you do not take breakout trade, you wait for the pullback. Yeah, so pullback where? Pullback to the support level between the 20 days moving average and the 50 days moving average. Yeah, and then you look for your buying signal for it one green, and this is where you could be in the trade already. Okay, so be patient, right? So I'll just go back to AEM. So be patient. And same thing, don't chase it. Breakout could have happened, wait for the pullback. All right. Okay, so yeah, so just a quick recap. This is something new to maybe some of you, right? This ESPMaster. All right, so you can use, just go to ESPMaster.chartnexus.com. Yeah, for those with valid ESPMaster subscription, you'll be able to log in this. This is the browser. You can just use your Google Chrome, right, as your web base. Right, so here you can screen up. We have videos to share with you how to use this ESPMaster. Yeah, I'll put it in the link as well. So for those who want to learn more about using this screener, yeah, you can do that. It's pretty straightforward. Yeah, it's just go for the results. Yeah, and then this is where it screens out for you automatically. Yeah, once the market closes. Make sure you see the latest price. All right, so yeah, with that I'll end the session. There's no shorting signals, so most of it are bullish. Yeah, so always wait for confirmation and watch out for your stop loss. Okay, so thank you for your attention. Hope you get something out of this. If you like this video, click the like button and of course share it with your friends. Okay, thank you and good night.